Ladies and gentlemen, our program resumes now. Please welcome to the stage Lukas Haffer, CEO of Casca.
Thanks, guys. All right. Right now, small businesses in America are way too often falling prey to predatory online lenders, charging them enormous interest rates. And in the next 10 minutes, I'm excited to show you how we help community banks in America that offer low, affordable interest rates make more loans to small businesses, and how we help small businesses get the capital they need. Can we swap over to my presentation? Thanks. So right now, if you're running a small business in America, access to capital is regularly your #1 problem. And right now, you have two bad options. You either go to a community bank and you get the best conditions, the best terms, the lowest interest rates, but it's going to take forever. The average time to get an SBA loan, which is generally the best option for a small business, is 90 days. That's 90 days of frustration, emailing back and forth with a banker, 90 days of not knowing whether you will actually get the funding. And the second option is you go to one of those many online lenders that will offer you a merchant cash advance and promise you very quick funding, 2 or 3 days. That's how quick you need the money, right? But then you have a rude awakening when you realize now you're paying 25, 35, 45% APR. And I now see regularly small businesses apply for funding with one of the banks that we work with that have merchant cash advances on their balance sheet that clock in at an interest rate above 100% APR. And I don't know about you guys, but I hate it. I think it's unethical, it's immoral, it's not right. I'm from Germany. We call that loan sharking, and it's illegal. Here, it's not illegal, so it happens. And in a market economy, what do? We compete. And so I'm not a banker, but I spent my whole career building banking software, and I spent 2 years at Stanford doing machine learning research, researching at the frontier of what artificial intelligence can do. And so I realized that the biggest problem for the banks is that they just don't have the technology, the modern technology, that makes it possible for a small business loan application to go just as fast as getting a new credit card or an auto loan goes for all of us as consumers. So now I want to show you how we do it. Our journey starts with a beautiful online application. This is an application that takes roughly 5 minutes to fill out, 9 days average time to funding right now. We're going for 3 days. That's our goal, to meet how fast the predatory online lenders can be. And we call out that this comes in at 10 to 12% APR currently with the current interest rates. But we know small business owners don't always think in APR. They think about, can I afford that next monthly payment? So we give an example. It's $2,000 next month for a $150,000 loan. And this is a 10-year loan with no prepayment penalty, which means you can pay it back at any point in time without having to pay a huge balloon payment about it. Once small business owners submit this online form, which is incredibly simple, like my average credit score is 700, I've been in business for over 2 years, boom, a shot of dopamine. Great news, you seem like a good fit. Based on the information provided thus far, you seem like a great fit for an SBA loan already. Once people submit that application, they land in our online applicant portal, which looks something like this. Very simple. On the left side, you see all of my open to-dos, all of the things, the documents that I might have to upload, things we see regularly as banks asking for the last couple of years of business tax returns. We also offer the option of authenticating with the IRS, and we pull your tax returns from the IRS. We see people collect the last couple of months of business bank statements, and we allow you to also just connect your bank account via Plaid, and we pull the information out of your bank account. And it's things like figuring out whether your business has any existing debt and how your personal financial situation is, or verifying your identity to prevent fraud. On the right side, I can see the current status of my existing loan application. What matters here is make it incredibly simple and easy for business owners to go through this process completely on their own without having to wait for a banker. Because in the current world, most banks don't even have an online application. You reach out to an email address, and then you wait for a couple of days until someone gets back to you with maybe an initial list of questions via email. You answer the questions via email, and then you get a list of a bunch of documents. You send the documents, and then you get a list of more documents, and you send more documents, and that drags on for 90 days. And that banker is also not just focused on you. They're focused on a bunch of different leads. You're now a lead to them, and it's really not about you. So we make it incredibly simple for people to fill this out. And I want to make one example. If you apply for an SBA loan right now, one of the first things you're going to be asked to do is fill out this form. I don't know about you, but I got scared when I first saw that form. This is incredibly intimidating. And after seeing small businesses try to complete this, I realized that no one ever completes it completely correctly, completely on their own on the first try. Usually the way it goes is people make a mistake somewhere. It's also asking for a lot of redundant information that we already know about, like the name and the phone number. Like, we long know that, right? And the last time I saw someone fill it out in this liabilities section, they wrote mortgages 1. And I thought to myself, congratulations, you have a mortgage, but I really need a dollar figure as to your liabilities here in order to assess your financial situation. And then it hit me. Why are we doing this? This is like filing my taxes manually with the IRS, and no one does that. People use TurboTax, for example. So we just turned it all into beautiful online forms that someone can fill out within 5 to 10 minutes, completely on their own, on their smartphone or on their desktop. And then when we got to that liability section, we realized we actually don't need to ask you for how much you owe on your mortgage. I just pulled your credit report. I know exactly how much you owe on your mortgage. So the question really just turns into, is this consistent with your personal financial records? Incredibly simple, and takes it from a task that typically added 4 days onto the loan closing cycle because of the back and forth, to something that we now are so confident someone can complete in less than 10 minutes. We literally put a timer into this form. And wouldn't you know it, after we put that timer, more people completed the form, and the banks had more complete loan applications, right? So I don't want to walk through all of the many things that we turned from something that was archaic and hard to do and caused a lot of churn and errors into something simple. But that is what we did at the front end. Now, some small business owners land in this portal and they just complete all the tasks. Many people don't. Many people land here, they complete 1 or 2 things, and then something happens in their business, or their kid is throwing a tantrum and they say, I'll come back to it later, which they almost never do unless you stay top of inbox, top of mind. So on the other side, we can now look at what the banker sees. The banker sees the exact same list of to-dos and can easily send follow-up messages. We send some ourselves, but we also enable the banker to take a hyper-personalized follow-up email and send it out within seconds. This allows you to treat every customer like the only customer, and it means that the small business owner doesn't just get a bunch of marketing-esque standard emails. They get some communication that is perfectly tailored to them. So this is about using AI. This is our first use case of AI. It is following up with people way more regularly, often within 5 minutes after they just uploaded the last document. We noticed something new. We can give them a hyper-personalized follow-up. We can answer any question that they might have much faster. Now, as soon as people submit all of these documents, we read all of the documents. That's the second use case of AI in this. You can see that this is an online application for a dental practice in San Diego. They've been in business for 24 years. They've got 12 employees. And below, I can see that we already analyzed their financials. We pulled the 2023 and 2024 revenue off of their business tax returns. No human had to be involved up until this point. We just read the documents. And then we got the 2025 financials off of their management-prepared financial statements. We can see that this business is profitable and growing year over year. And we even calculated whether the business will be able to pay back the loan based on the loan size. This number, this DSCR, debt service coverage ratio, is what most banks use in order to analyze whether a business will be able to pay back the loan. We also went out to their website, read the website to get a brief description on what the business does. And then immediately after they uploaded all of their documents, screened any sanctions registers. We screened real estate, if we're taking real estate as collateral or if someone is buying real estate. We screened them for eligibility according to the government's criteria for SBA loans, the SBA standard operating procedures. We validated that the business is in good standing with the Secretary of State, that they have filed their annual reports, because if they hadn't, then a bank would reject them. But with our system, we notice they are not in good standing, and we can just send them an email that says, here's the link, pay the $65 fee, and you're back in good standing. By the way, if you're not in good standing with the state, you're actually not allowed to do business. So also a nice little helpful piece of advice for small business owners. We scan even more fraud-related checks. We scan whether the business is allowed to do business with the federal government. We pull a soft credit report on the small business owner and analyze it against the bank's criteria. And with all of that information together, we can immediately tell you whether the business is going to get approved for a loan. No human had to be involved, and I already analyzed whether their cash flow is good and they'll actually be able to afford the loan payments. That's both in favor of the bank and in favor of the small business owner. We looked at the historical default rate of the industry, which for dental practices here is moderatively low. We looked at the experience of the business owner in the industry, which we know decreases the risk of defaults. We looked at their credit score, the number of employees. More employees usually means lower probability of default. We looked at how long the business has been around. Having been around for longer typically means that you have more stable customers and you have more stable kind of procedures. We look at their year-over-year growth as well as their liquidity, which means how much runway do they have? How much money do they have in their bank account? How many months of the loan payments are they able to afford based on what they have currently today? There's way more things that we analyze, and that makes it easier for the banker to make a quick decision. For example, reading all of the bank statements and validating that the information we get on the tax returns is also in tune with what we see on the last 3 months of transaction data and business bank statements. Altogether, this allows a lender to make a quick decision on whether someone is going to qualify for the loan within 5 minutes after the application came in, and it allows the small business owner to complete the application at any point in time, which, interestingly enough, now that we have the data, because we see people go through the system, most of the time happens on nights and weekends. We see that roughly 63% of loan applications are actually completed outside of banking hours, and it makes total sense if you think about it, because during the week, a small business owner is running their business. They don't have time to answer a phone call that is coming from the banker. They don't want to answer a phone call from their banker in front of their employees talking about a loan. They don't have time to walk into the branch during the middle of the week. The shop is open. They're running their business. They want to do this whenever they have the time, and we see peak hours every week. Friday night, 10:30 p.m. It's after you closed up the shop for the week, you brought your kids to bed, and you're getting ready to do your admin work of applying for that funding that you need for the next big inventory purchase, for the big contract that you want to expand your business. The reason we do all of that is because we believe that small businesses are the backbone of America. It's the backbone of the American economy. Small businesses employ 65% of the American workforce. They are the majority of the American GDP. They are what makes the American dream possible. And we believe that the banking sector has the potential to help them achieve that, but it needs better technology. And so that's what we do. Thank you, guys.